Today we're tackling a very important topic, VAT. I know it gives a lot of business people sleepless nights, but it really shouldn't if it's managed well. We're going to start it from the top. So what is VAT? As you know, there are various tax types in South Africa, and one of them is VAT, which stands for Value Added Tax. This is an additional tax that is charged on your goods and supplies, and it is charged at a rate of 15%. What this means is if you're a business person and you are trading, you are then required to charge an additional 15% on your goods or services. For example, if you are selling a product at 1,000 Rand and you are VAT registered, then you are required to charge 1,000 Rand plus an additional 15%, making your product to the customer sellable at 1,150 Rand. The 1,000 Rand you keep for yourself, it's your revenue, and the 150 Rand is the VAT portion that you're now paying over to SARS. Effectively, what this means is that you become an agent for SARS. And this is where most entrepreneurs get it wrong, because you're receiving all of this income and most of it is not yours. Portion of it, 15% of it, belongs to SARS. What I always advise business people when dealing with VAT is to always have their agents or debt collectors hat on. What this means is that they must open a separate savings account or any other interest-bearing account where they can transfer this VAT money over to that account, let it accumulate interest for them over time, so that when their cycle comes for them to pay this amount over to SARS, it is readily available and it is not mixed up with their normal transacting income. There's two classifications of VAT. The one that I just explained on my example is output VAT. This is VAT that is payable to SARS. There's also another one which is input VAT. This is input VAT that is received or claimable from SARS. What this means is that if you are a registered VAT vendor and you buy from a supplier that is VAT registered and they charge you VAT, then the VAT that they have charged you is allowed to be claimed from SARS and it can be used to reduce your output VAT. So when do you register for VAT? There's two types of registration. There's compulsory registration and there is voluntary registration. Compulsory registration is when you are going to meet a 1 million Rand mark by the end of your financial year. So in that case, I always advise that when your revenues start hitting around 90,000 Rand, 85,000 Rand a month, then chances are by the end of your financial year, you will be at that 1 million Rand mark and you need to be tax registered. It's important to note that you don't have to wait till you get to 1 million Rand. And that is a mistake that some of the entrepreneurs make. Voluntary registration. So there may be times where you foresee that you may have some capital expenditure or you have a contract that requires you to be VAT registered, an upcoming one. So SARS does allow you to register voluntarily, even if you haven't met your 1 million Rand mark. So some businesses, when they are still setting up and they're incurring capital costs such as furnitures and fittings, they usually register their businesses and take advantage of the input VAT claims even before they start trading. So what happens when you haven't registered for VAT when you should have? Well, that's a no-no and you shouldn't try your luck. Because what happens is that SARS will make an estimation of what you should have paid from the time you should have registered. On top of that, charge you a penalty, on top of that, charge you interest, and then give you a hefty bill. And that happens as soon as they pick up that you haven't registered for VAT. What are the benefits of being VAT registered? Most businesses that are VAT registered enjoy and they love doing business with other VAT registered businesses. And the reason for that is input VAT claims. If you're dealing with a business that is also VAT registered, then you are able to reduce your VAT that is payable to SARS by the VAT that you have been charged by your supplier or service provider who is VAT registered. This is really great for businesses that are trading products as opposed to business who are more in this service-oriented industry. Why is that? Because businesses who are trading in products mostly have their expenditure as purchases, and they purchase from suppliers who are VAT registered. What this means is that most of their expenses can attract VAT input, which then reduces their VAT output. Service-oriented businesses usually have most of their expenditure in the form of salaries, and salaries don't necessarily attract input VAT or VAT or any VAT for that matter. So what that means is that their output VAT that they're paying to SARS is usually much larger than product-based entities. How do I register for VAT? Well, you can register for VAT on the SARS website. There is a long list of documents that SARS will require from you, and you can submit this online as well. It can be a really tricky exercise. So I always suggest that you get an experienced finance professional to assist you with this process. Usually, most of them will assist at a specified fee. With us at the Accounting Village, we offer this service at no charge to our existing or new clients. What do I need to do once I've registered for VAT? Well, first of all, you need to understand which category you fall under, because there's various categories. Normal businesses will fall under category A and B, and these are categories that work on a 2-month cycle. What this means is you will only ever pay SARS 6 times a year for VAT. Another category will be a category where your revenue has reached 30 million rand. This works on a monthly basis, which means that your VAT due to SARS is payable on a monthly basis. The other category applies to farmers. Because their business is cyclical in nature, SARS allows them to pay their VAT every 6 months. Secondly, make sure that the invoice that you are preparing for your customers or clients is SARS compliant. If it is not compliant with the SARS regulations, then that invoice will be rejected. SARS has various guidelines for this, and we do have them on our website under the resources page. Just also, importantly, you need to make sure that your suppliers and your service providers provide you with a compliant invoice. And if that doesn't happen and you submit it to SARS, they will reject it when they audit your VAT input claims. Thirdly, VAT can be tricky. It is law, and it needs an experienced eye of a professional. For example, you may be purchasing a motor vehicle or a bakkie for your business. And unless you know exactly how VAT laws describe what a motor vehicle is, you may claim input VAT for that purchase, only to find that it doesn't meet the official definition of a motor vehicle. That is why it is then important for yourself to get acquainted with a professional or accountants to assist you in managing your VAT. Our packages at the Accounting Village include VAT management. And if you speak to us, we'll be able to assist you with it. Is it possible to be constantly claiming input tax refunds? Well, yes, but in very exceptional cases. Firstly, if you are running a cyclical business where for a period of time you are only incurring expenditure and revenue comes in only later. So for those periods where you are incurring expenditure, you will be constantly claiming VAT refunds. However, when you receive your revenue, the output VAT that you pay during that period will probably outweigh the VAT refunds that you have been claiming over time. Businesses who also supply zero-rated supplies may find themselves in a position where they are constantly claiming input VAT. For any other normal business, though, it is not normal for you to be constantly claiming for VAT. Why is that? Because it means that you are incurring a whole lot of expenses versus the revenue that you are receiving. And that means that you are making losses in your business. And that is an even greater problem to have. VAT refunds are almost guaranteed and ordered. What this means is that if you are submitting and there's a refund, SARS may ask you to provide supporting documentation. And if you do not have that in order, they will reverse your claim, they will charge you interest on it, and they will charge you penalties on it. So you do not want to mess around with refunds. I hope that you have found this very insightful and it will help you in navigating VAT a little bit better. I will be posting more videos like this one on VAT and any other finance related topics. So please subscribe and follow the Accounting Village on all social media platforms.